I'm Jata, your local realtor. If you're a first-time home buyer, then this video is for you. Jason Sullivan, one of the most versatile lenders that I know, is going to talk about the different loan programs and what first-time home buyers should know. So whether it's USDA, VA, FHA loan, here's what you should know.
All right, today we're here with Jason Sullivan, Integrity Home Mortgage Corporation. So, Jason, I got a lot of questions from first-time home buyers, so wanted to talk with the expert about some of these questions.
Sure.
So, first question is the first-time home buyer credit. How does that work? Do they get a check? Do they get it at closing?
So the first-time homebuyer credit actually isn't a check or anything that's given to them at closing. The first-time homebuyer credit is down payment assistance. So the singular benefit of a first-time homebuyer program is to offset down payment. So there's a multitude of different loan programs, conventional, FHA, VA, USDA, everything like that, that the first-time homebuyer program allows. But it really comes down to two programs. And the first-time homebuyer program in the state of Virginia is Virginia Housing Developmental Authority, VHDA, or I think they now go by Virginia Housing for short, right?
Okay.
So any of your customers can go to vhda.com and research any of this information that we're going over to kind of fact check if they really wish to.
Okay.
But the first-time homebuyer credit is not actually a monetary credit given to them at closing. The first-time homebuyer incentives are the down payment assistance. So as I said, you can cover between FHA, conventional, VA, USDA, all the different loan programs that exist. The first-time homebuyer program does cover those. And it comes down to two options. You have the Plus program, which is the 100% financing.
Mm-hmm.
Now, the Plus program is broken up over two loans. You have a first trust and a second trust. So to give you an example, if you were doing a standard FHA loan through Virginia Housing, you would have a first trust for 96.5% and a second trust for 3.5%.
Okay.
So there is your 100% financing, right, as a first-time home buyer. And in our area, other than VA, there really are no 100% financing options out there. The second option for the first-time homebuyer program is what's known as the grant program. So the grant program is not as different from the Plus program. The grant program is not two loans. The grant program is one loan. What happens there is, as a first-time homebuyer, as a qualified first-time homebuyer, the borrower would receive a grant from Virginia Housing for a portion of their down payment, not their whole down payment, but a portion of. All of the programs still require on the grant program that the borrower come with 1% of their own funds. Okay. So same example, if you're doing an FHA loan, your down payment is 3.5%. VHDA would give you a grant of 2.5% to go towards your down payment. All right.
Okay, awesome.
None of these, common misconception, none of these programs cover closing costs.
Okay.
They only cover down payment assistance. Closing costs would still be separate. Okay. But with the grant program, as I said, you do get that portion of your down payment offset, and that grant from VHDA never has to be repaid.
Awesome.
It is the only true first-time homebuyer grant that never has to be repaid.
So, Jason, you brought up a very good topic there, closing costs. So you have your down payment, and then you have your closing costs. How should one prepare or estimate how much their closing costs will be?
It's not perfect, but the best way for a consumer to estimate what their closing costs would be is roughly about 3% of the sales price.
Okay.
So, example, you're buying a $400,000 house, your closing costs will be roughly, and again, it's not perfect, $12,000.
Okay.
Could it be less? Yes. Could it be a little bit more, depending on different caveats to the closing cost? Absolutely. But that's a safe number to use from a consumer standpoint, is the 3% rule.
All right.
Closing costs.
And then if they're getting down payment assistance, that does not apply to the closing costs.
Correct.
Okay.
So your down payment assistance is for the down payment on the loan for the qualification of the loan purpose itself. The closing costs are what is the separately paid items at the settlement table for your escrows, your title fees, your lender fees, your prepaid items, all those things, your government recording charges, things like that. That's what makes up your closing costs. Those cannot be financed. They can never be financed on a purchase.
Okay. Very good to know. And then a lot question that I get all the time is that EMD, earnest money deposit. Where exactly does their earnest money deposit go?
So that's a twofold question. Normally, your earnest money deposit goes towards your down payment. Okay, that's the first place that it's usually applied to. So if you're putting $10,000 down and you give a $2,000 EMD, now your down payment is $8,000, right? Because you've already given $2,000. So the first place it's usually applied to is your down payment. However, in today's market, where seller credits and closing concessions and things like that are not really happening, your down payment, your EMD goes towards your cash to close. So your cash to close is a combination of your down payment and your closing costs. It's a combination of those two numbers, right? That's your cash to close. That's the money due from you at settlement. Now, any money that you give ahead of time, such as your earnest money deposit, your appraisal fee, things that you pay into the transaction in the beginning, those all get credited back at the end and get deducted from that cash to close.
Okay, awesome.
Let's just say you're doing the Plus program through VHDA, and so you don't have a down payment, you're doing 100% financing. Jata was lucky enough to, hound the seller into giving you a full 3% seller credit towards your closing costs. Your EMD can be refunded to you at the table.
Awesome news.
So that is a reality. If all the costs are paid, your EMD can be refunded.
All right, awesome. So Jason, you touched a little bit about incentives and programs that they offer first-time home buyers. Can you go a little bit more into detail? What exactly does that mean, being a first-time home buyer?
So being a first-time home buyer is, just as we said, you can be a true blue first-time home buyer. You've never owned real estate in your life, okay? The second caveat there is, if you have not owned real estate in the last 3 calendar years. Now, that's a big deal. 3 calendar years. You are then now considered a first-time home buyer.
All right. Okay. So, if I had a mortgage and 3 calendar years have passed, I'm now considered a first-time home buyer. Okay.
Now, being a first-time home buyer is not the only guideline that you have to meet to be eligible for a first-time homebuyer program. And as you remember, what I stated earlier, qualified first-time homebuyers.
Okay. What are some other qualifications?
The big one is, for a first-time homebuyer program, they have income restrictions on their programs. And this is usually how I explain it. If you're coming from the rental world, usually it's a minimum income that you have to meet in order to qualify for the rental and what you're looking at getting into, right? VHDA is the complete opposite of that. So what VHDA has is income caps on their program. Basically says, and it depends on the county that you're buying in, it depends on the program that you're doing, and it depends on the size of your household. So there's many different things that go into looking at that income cap. It's not a straight number across the board like some other programs like USDA is. They have just a straight number across the board. They look at the program and what you're doing, the county in which you're buying in, and the amount of people in your household. So there is an income cap, and what that means is, to put it in English, if you make over X, depending on those other things, you would not be eligible for a first-time homebuyer program. You would exceed their income limit.
Gotcha. So Jason, for first-time homebuyers, it could be a little confusing kind of which loan type to go by. Can you briefly highlight the differences between FHA, conventional, jumbo loan?
Sure. So just to put that at ease, VHDA does not offer a jumbo option. So the maximum sales price limit for our area in the DMV for VHDA is $525,000. So they don't have a jumbo option. If you're a jumbo customer, you're probably not going to fit the other molds of the VHDA qualifications. So they don't have a jumbo option. They do have a VA option, an FHA option, and a conventional option. There's really no benefit that I have ever found to utilizing a first-time homebuyer VA scenario. The standard VA program is more than sufficient to meet the needs of our active duty servicemen and women and veterans. VH Virginia Housing does have a VA option. They do. Not something that in my 20 years of doing this that I've really found a fit for it, right? The standard VA criteria is more than sufficient for those type of borrowers. And again, to qualify for a VA loan, you either have to be an active duty service member in the United States military or reserves, or a veteran of the United States military or reserves. There are some other caveats in there, and again, this would be more of a deeper dive into VA benefits and what have you, but that's the main two. There are some other options, deceased veterans and things like that, but that's a different topic for a different day. So really, the Virginia Housing, the first-time home buyer program focuses on conventional loans and FHA loans. The differences are with the conventional option, it's a 3% down payment. They still have the plus option. They still have the grant program on the conventional. On the FHA, it's the 3.5% down.
Got you. Now,
still have both.
I think that's good to highlight because people are still thinking years ago when it was much higher.
Correct. So for a first-time home buyer on a conventional loan, if you are a true first-time home buyer on a conventional loan, there's a 3% down option. Now, stepping aside from the first-time homebuyer program, Fannie Mae and Freddie Mac also offer their own 3% down conventional option for first-time homebuyers. There's no grant programs or no plus programs associated with it, but then you don't have the income restrictions that you would have to meet. So again, something we can play with. So the qualifying ratios are the same for both programs. So really, if you meet one, you meet the other. So.
Awesome. All right. So Jason, I'm a first-time home buyer. I'm ready to purchase a home. How much money should I have saved up?
Well, that's an interesting question, and the question I get quite frequently is, and everybody's answer is going to be probably a little bit different depending on the programs and what have yous that we're looking at. If we're looking at the Plus program where you don't really have a down payment, we can do 100% financing for you. We can push you through on that program. You're going to want to have probably 3 to 4% of so you have to look at the price point that you're looking at, right? So, and you would establish that early on this is the price point that that's going to cost me to get to where I want to live. Right? Whether that be, 200,000, 300,000, 400,000, 500,000, whatever that number ends up being, right? This is what it's going to cost me to get in the neighborhood that I want to be in. All right. And we can establish that early on in the process. What I would say at that point, if that's, $400,000 is what it's going to cost you. I'm just giving you examples to get into the neighborhood that you want to be in, and you're probably going to want to have about $15,000 to $16,000 put aside to do this. I usually tell first-time home buyers we want to have at least 3 to 4% in the bank ready to go. Liquid, and when I say liquid is a broad term. Because investment accounts are also considered liquid assets. So not just checking and savings. Investment accounts are also considered liquid assets. So again, if you've got a 401k or an IRA or a TSP or any of those investment accounts.
So if I have a retirement account,
those are considered liquid assets. Now, keep in mind, every retirement account is different with how you're able to access those funds. So before you really get into a deep dive, you're going to want to reach out to your carrier and find out what their restrictions are and how much, if you needed to access that money, how much you could access. But we as lenders consider those liquid reserves.
Awesome. Very good to know.
But that's if you're not doing, if we're just doing a standard loan program or what have you, and you're putting money down and what have you, you're going to want to have your down payment plus about 2 to 3% extra on top of that. Really put away to make this as stress-free as possible for you.
Totally agreed. All right. So what it sounds like, if you have other questions, definitely give me or Jason a call at the number below.
Yes.
Awesome. Thank you very much.
Absolutely. Pleasure.